So I can even start again, just as you have seen. You can even start again the analysis. This area respected, somehow respected there. So that whole zone, the whole zone, it's a level of what? Of resistance, which the market came, then respected that, of which we're still in a bearish market according to the daily. So we also have this, if the market comes here to this low, because that's a lower low, if it fails to break lower, that's when maybe we can give it a double bottom there, then shoot up. That is if it fails to break that lower low. That is if it fails to break that lower low. So I can also add another level at the bottom here. Where price can come and touch before doing anything else. So this area here, respected. It's also a significant area, this area. So I am done. I have that one and I have those ones. So last but not least, I have that major trend line that I showed you. That trend line is a very key trend line. That one is a key trend line. That one, it's a key trend line. This one, very, very key trend line. Okay. Let me put the trend line here on the daily. So that trend line, very, very significant trend line, because it's a major support when you're not speaking in those terms. It's a major support on this daily time frame. It's like price is on a major support when it's on this trend line, because the market has been above that trend line. So it's acting as a major support. But once you see a major support being broken, know that we are now looking forward to long-term, very much long-term sales that can happen, and that many people are not even ready for right now. The majority right now of VIX75 traders, they may not be ready mentally for those things to happen. So so once you see it breaking here, this major support, which is the major trend line, know that we're expecting longer term sales there on the VIX, because market structure is still bearish on the daily. It's still bearish right now. If it fails to, if it breaks there, if it breaks this low, going to make a lower low, it's continuing with its bearish market structure to continue just like that.
Okay.
So you can also look at it like this. like this. Price breaks our 0%, we always know what to do, which is this lower low. So even on the 4-hour, market structure is still bearish. Market structure, in as much as these trend lines were broken, trend lines, they don't resemble market structure. Trend lines, they don't resemble market structure. This break of this trend line was simply giving us those short-term buys that happened. But overall, if you now look at it overall, because the recent major lower high was somewhere around here. The major one, I'm not referring to these minor ones. These ones are minor ones. I'm referring to these major ones, the ones that happen after a move that is significant. So lower low, lower high, lower low, lower high, then coming back now there to the lower low. So market structure is also still bearish, even though on the smaller time frames there was a change in market structure. It was good because it gave the short-term buying opportunities that were there. That happened for a day or two. So right now I'm still having that same bias that I showed you in the morning of price coming to this area. Nothing has changed, nothing has shifted. Once price comes to this area, we want to see, is it going to break? If it breaks, we'll simply sell more and go with it. So even looking at your 50 exponential moving average, this one also is a very key moving average, because if the market does not break this one, that market can continue moving in that direction for a long time. If you check on the 4-hour, it's still above, meaning what it simply means, that most probably the market is still in the bearish move up until it comes and breaks it. That's why most probably you can now say, right now the market structure is now bullish. We can now hold trades for longer. We can now hold our trades for longer. But now we can't even say that. Now we can't even say that our overall bias, our overall daily perspective, the market structure is still bearish, So don't rush to say the trend maybe is now shifted and it's now most probably bullish. That happened, yes, on a smaller time frame, and those opportunities, we took advantage of those opportunities. They were fine. There was nothing wrong with that. But now we are looking at the overall picture now. Overall picture, what is happening on the overall picture. Right. So here we are on the 1 hour. On the 1 hour time frame, 1 hour time. So 1 hour time frame now, if you check here, this was simply an indication to say come out of what? Of the buys. This trend line was guiding you to come out of whatever buys that you might have taken from the bottom there. It was also supposed to guide you for those buys. Then here, this area here, the whole area there, here, that area is also a significant area. This whole entire area, break, retest, break, retest. So now, my 0%, let me push it like this. On the 1 hour, let me push it further down there. So here we are. Price responded on the 50% Fibonacci, which is good. One can even decide to make their point A this area. It's also fine because you're simply going to say 61.8. It's fine as well. It's also fine like that. So now here we are. This area is a significant area. Broke out, retested, went all the way. Broke out, retested, went, broke out, retested. So somehow, were you really monitoring your chart? You're supposed to actually see that those short-term sales that we took for almost like 3 hours, one could have those could have closed either at a small profit or break even, honestly. Because personally, what I do after a trade plays around and it's in my favor for 3 hours, I cannot afford to take any loss on such a trade. It either has to close on break even or small profit, because 3 hours of waiting, then you just want to take a loss after that. It doesn't make sense. So here now, what can happen now? What can happen was this zone here. This price went inside. It can even come maybe to touch here. That can happen. Price can come and touch that area there. Right, here we are. It can come and touch. If it doesn't, it's also fine, because in as much as we have this Fibonacci from the daily, I can ignore it for now. Then I'll focus on this one, point A to point B, like this. Bounce on the 50%. Bounce on the 50%, which was a good entry point there as well, because you could have used this resistance as another confluence. So here, if it doesn't come there, either to the trend line or to this area, if it doesn't, it's fine. If it breaks our zero, we know what to do. Wait for the retest on a smaller time frame. Once you get the retest, we take ourselves all the way to this level of support there. So our overall bias this morning, nothing has changed. Our overall direction and everything, nothing has changed, nothing has shifted. Still the same. Still the same thing. We're still looking at the same thing. So I hope everything is clear and it's making sense.
Sure.
Yeah.
Right. So here we are. Once the 0% is broken, we know what to do. Once the 0% is broken, people, they know what to do. We simply sell more. Once it's broken, and you get once it's broken like that, we can simply join the sell and sell more. This support is still our first target for now. We want to see the response of price there. Is it going to break? If it breaks that one, we are still still a continuation of sales up until maybe price decides to shift market structure on a daily time frame. It can even push further. That can happen. The market has enough power to do anything. market has enough power to do almost anything. The market has enough power to do almost anything. So that is the current lookout for the VIX. That is the current lookout for the VIX. If you have any questions, you can ask.
I don't have any questions just for me.
Anyone with a question?
No questions for me. No questions for me.
I want you to see something here. I want you to see something here. This trend line, if you look at it closely, this trend line, first touch, second touch here. After the second touch, to me, this next, it's also a touch. That's actually a third touch to me. Those are opportunities where I can go hard. When I mean hard, it's not every time. These opportunities, they don't happen every time, whereby first touch, second touch, third touch there. That next trend line, it came touched, even this one came also and touched the trend line. Those are moments where I can even go hard. My stop loss, it's very, very, very tight, just above the level. If you check here, this stop loss was a $2 stop loss with a minimum lot size. With a 0.0001, the stop loss is a $2, meaning depending on one's account size, one could have even used the 0.005. They could have risked $10. 0.01, they're simply risking $20. 0, so it's like that, depending on one's account size. Now they now decide, but those are moments where, because my stop loss is very tight, very, very tight, very, 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 very tight. Those are moments where I can use a bigger lot size, because I know the stop loss is small at the end of the day. So even someone with $100 account could have even used a 0.005 there, because you know that I'm simply risking $10. I'm simply risking $10. And right now it will be open profit and loss there. It's currently $9 with a minimum lot size. With a 0.005, it would be $45. So those moments, they are not always every time. They don't happen almost every time. But when they do happen, I always make sure that I maximize on them. For example, I can give as many examples as possible here. There, straight on the trend line, I have my trend line. I also have my level of, I also have that level of support there. Just below, if you check the stop loss, is still the same $2 with a minimum lot size, meaning I can afford to risk more depending on my account size. They don't happen every time, but when they do happen, I know when they do happen, I can actually see them. I can actually see them when they do happen. I can actually see them. So that is where now the skill, it's part of the skill, knowing when to go hard. Even a lion, it actually knows when to really, whenever it's striking its prey, there are moments where it goes all in, like it puts almost every effort that it can, because it knows this moment it doesn't happen every time. For example, when it sees the prey away from the rest of the animals, that's a moment where it can go all in, because they don't happen always. Those moments, they come once in a while, but when they do come, you need to maximize on them. So they don't happen every time. But when they do happen, if you check the risk to reward from there to where we are targeting, it to go, that's something like 1:20, 1:21. Just from there to there, meaning if ever someone risks $10, I'm just speaking in terms of small account holders. If ever they risk $10, they're going to make 21 times what you risked, which is going to be 210. If ever you risked How much can I say? How much can I also say? $20. You can actually you're going to make 400 just from there to there. Risking $20 to make $400. That's a crazy risk compared to reward. But those moments, they don't happen every time. They don't happen. First touch, second touch. This, to me, it's actually a mean third touch. What price can actually go down like this. So other people right now, they are busy waiting for, they are actually waiting for something like this. This is their third touch. But to me already, I'm already in based on my third touch. My third touch has already happened. But then they are still waiting now.
Do you ever take any trade on the bounce of 50 there?
Bounce of what?
On the bounce of you said this is a 50 MA, yeah?
Okay, yeah.
Yeah. Do you ever take the bounces? So
I don't really
use it for trend.
Yeah, the 50 EMA, it depends with the time frame that I'm looking at. For example, when I look at the 50 EMA, let me show you from the 1 hour.
1 hour.
The 50 EMA, when I look at it from higher time frames, example like the 4 hour, the 1 hour, it's also fine. 4 hour there, because if you check on the 4 hour, my 50 EMA is still, it's still above, meaning we're still going down, right? That is the overall direction that I take from it. Same as the 1 hour, the 1 hour is also now saying the same language. Here, even though it bought, which was the short-term buys that we're in, but the break now, it happened, it actually broke, the market broke below the EMA, went above, broke again. So now it's still, the market is below now. Yes. Meaning it's now confluencing with what we saw on the 4 hour.
50 fib, the resistance, the trend.
Yes. So it's now a combination of confluences. My higher time frame is saying we are still bearish. My 1 hour, it's now also saying the same thing. So once I see that, I know I can even take trades on a 15-minute, even though the EMA will be, because the 15-minute, it has some form of noise sometimes that might affect.
Too much noise.
Yes. So here I'm simply expecting, if even here, if it comes there, you will see the EMA, you see the market breaking below the EMA. So it will simply be confirming with what we are seeing already on the 4 hour and 1 hour.
Overall bias.
The overall bias, yes. So that's what we do. It's just an indication, an additional confluence that we use.
Thank you.
When it bounces, especially on the higher time frame, those entries I can even take them based on the bounce on the higher time frame.
Okay.
So that is it. Anyone with another question? Anyone with another question? Anyone who might have another question? So it's clear.
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 Okay. Okay. So I hope people are going to make money out of the move that we're anticipating, because I'm still anticipating price to push all the way to this downside. We're still having that expectation, and that is going to happen. That is going to happen. We expect that to happen today, not tomorrow, but today actually. Like in the next few hours, we expect price to be pushing up until it goes all the way to our TP. So that can happen whilst many people are sleeping. What you simply need to do is to make sure that if ever you're not already in, You can wait for the opportunity. Once the opportunity presents itself, you can join in and put your stop loss. Once you have your stop loss, your safe stop loss, then you can as well go to sleep. Because so the first the entries that we're expecting somewhere around here, we're expecting another entry, the break of the zero, another entry as well there. So those are the entry points that we're currently looking out for the VIX. Those are the entry points that we're currently looking out for the VIX. Those are the entry points that we're currently looking out for. So even the smaller time frame market structure is now going back to confirm to the higher time frame overall market structure, which is still bearish. The lower time frames, they are now back now. This short-term buy, yes, it happened, but they are now going back to. So this was simply a retracement according to a higher time frame. A retracement according to a higher time frame. A retracement. After the retracement, we have to go back to our original trend, which is bearish, lower high. We have a low there, lower low, and lower low here. So from this lower high, what we now anticipate is price to come and break this low. Once it breaks this low, it can push further. So that is what we're currently looking at. We're simply having a bearish bias so far. We're still having a bearish. So now, another worst case scenario. Worst case scenario is when you see price coming and breaking market structure like that. If you see it breaking this trend line, if you see it breaking that trend line and not rejecting on it, it means somehow there is now most probably a shift that is now happening. That it might go up before going down. That might also happen. Those are worst case scenarios that we are also mentally ready for them. We are mentally ready for them, even though they don't happen that often. But whenever they do happen, we are also mentally ready and prepared for them. Unlike someone who simply carries one bias, that person, is so hard for them to adjust to any worst case scenario moves that can happen. It will be so hard for you. But so far, we are simply looking out for sales. We are simply looking out for sales. We are simply looking out for sales up until we get to that support. Once we get to that support, which is a lower low on a higher time frame, we want to see the response of price. Because once we get the rejection there, to us it will be an opportunity now to buy at a lower price, buy earlier. Because once we buy earlier, there it will be a double bottom on a higher time frame. And every double bottom has a neckline. The neckline is somewhere here. The neckline is somewhere there at the top there where price began to reverse. So once it gets to the neckline, once it breaks the neckline and reaches, we'll simply add more further buys up until we hold all the way to the targets that we have on a daily perspective. But so far right now, we are looking out for our sales. We are simply looking out for ourselves. We are simply looking out for our. So here you can also add another Fibonacci, another mini Fibonacci there. Another mini Fibonacci. Let me hide this one. So that one can actually also guide you on the next entries that we are looking forward to, which is somewhere here on the 50% on the 61.8 there. I hope it's clear. I hope it's clear.
Yeah.
Right? So that will be the confluence that we'll be looking forward to. Bearish market structure on a higher time frame, bearish market structure as well. We are skipped in on lower time frames. Fibonacci retracement, also have a trend line. So all those things you're looking out for, all those things you're looking at them. That is what we call confluence trading. That is where the confluence comes in. Once you have so many confluences like that on a particular trade, they give you the confidence enough to enter the trade and also to hold longer, depending on the confluence that you'd have entered based on. So the next entries, we're expecting them somewhere there. If they don't happen there, if it doesn't come to the trend line, and if this 15-minute candle rejects here on the 50%, if it rejects on the 50%, just in case it doesn't come here, the 61.8. So you'll see that this one now, the stop loss can even be placed further away there. Above, you can even put it above the 61.8 or above the trend line. This is a $4 stop loss with a minimum lot size. It's still small. Still small compared to the reward that you'll get. So it's still small. That's how one can also enter, just in case it doesn't go to all the way to 61.8. It will still be fine there. So if you check right now, the momentum that I'm seeing right now kicking in there, it's serious, because most probably I think this EMA is the one influencing. Break, retest, break, retest. So it's simply a retest on the EMA there that might actually push price to go all the way down. So risk takers, they can already jump in. They can already start to be in. Either they wait for the candle close. You can wait for the candle close. That is the best entry. Wait for the candle close, then you enter. Your stop loss just above the trend line, which is above the 61.8, because it might, the third touch that can happen, it might go to the zero, then maybe it might not even happen like the way people expect. It might not even happen the way people expect, because it's not a must that it has to go and make that touch now. It can even go and make that touch after going all the way to the bottom. That's when you'll see it coming for a third touch. So that is what we're currently looking out for. Sales, we still have the same bias that we had in the morning, still looking out for sales. So that's also another good entry that one can take now. Another good entry that one can take now. The stop loss just above the trend line, which is also above the 61.8 Fibonacci retracement. We hold all the way to this level of support. I hope it's clear, and I hope people are going to make money out of this.
Yeah, we hear you.
Powerful. So want the feedback. How much have you made? You want the feedback. You want the feedbacks.